Okay, I think we'll kick off. There's a few of you still joining, but we're a minute in, so I think we've got a fair bit to get through. So I'll just get started. So hello everyone, and a very warm welcome to today's session from ESG Strategy to Sustainability Reporting. My name is Alex. I'm a senior program consultant here at the Business School, part of the executive education team at the University of Oxford. And I thank you all for joining us today. A little bit of housekeeping before we get started, just to note that we are recording this session today, so that with purpose being so that we can share it with those who weren't able to make it. So just be aware that we are recording this, first thing to note. Okay, so today's session is designed to give you practical insight into how professionals are navigating ESG challenges, from strategic alignment to reporting and assurance readiness. We're also going to introduce you to two of our flagship online programs, our ESG Sustainable Finance Strategy program and our Sustainability Reporting and ESG Data Management program. The second is newer of the two. We're very lucky to be joined today by two very brilliant guests. We've got Jeremy Osborne, the Head of Sustainability, AICPA and SEMA. He's our key program partner. And James, who has completed the ESG SFS program and is currently enrolling into the Sustainability Reporting and ESG Data Management program, which launches in June. So we'll be wrapping up with a bit of Q&A. So please do feel free to post questions throughout the live session, and do indeed feel free to tell us where you've come from today. We'd be keen to hear where you have all come from. So I'll just hand over to Jeremy and James to introduce themselves. So Jeremy, do you want to kick off?
Great. Well, thanks, Alex, and thanks to the team at Oxford for hosting this webinar today. I'm Jeremy Osborne. I'm the Global Head of Sustainability at AICPA and SEMA. AICPA is the American Institute of Certified Professional Accountants. SEMA is the Chartered Institute of Management Accountants. Together as the association, we are the world's largest accountancy institute. We've had a partnership with Side Business School at the University of Oxford for the last couple of years. And broadly speaking, the partnership is there to advance anything that we feel is of mutual interest for the accountancy profession. And as Alex has said, there are two joint courses that we've created with Oxford. The first is ESG and Sustainable Financial Management, which James has taken. And the second, which we're launching in 2 weeks today, is called Sustainability Reporting and ESG Data Management, which James has also enrolled for, which is great. And we'll talk more about these over the course of the webinar. So thanks for having me, and look forward to the discussion.
Okay, thanks. Okay, thanks, Alex. Thanks, Jeremy. Hello, everyone. I'm James Jang from China, Beijing. So it's a big honor for me to join this event tonight with all of you. As Jeremy just introduced, currently I'm working in Siemens Limited China as a commercial manager. Before I joined Siemens, I also worked for South China and other local accounting firms for years. In general, I have more than 20 years experience in various finance functions like accounting, tax, auditor, internal control. So currently, I'm working in our GBS function, which called Global Business Service. So we are major focus our internal service provision to our business units and corporate functions. So my linkage between digitalization and ESG is why or how we adapt our latest digital technology to build our highly efficient operation capability, and also support the company to engage in our finance digitalization transformation. So which I will give more detailed introduction later. So besides this experience in finance field, I'm very proud of being a reputation of being a thought leader and a lifelong learner, and well recognized as a role model by engaging ESG and volunteer activities. As Jeremy said, I'm also a member of AICPA and SEMA, and also act as a member of SEMA Mainland China area community. So many thanks for AICPA and SEMA's collection to Oxford Side Business School, so they can join to develop these very interesting programs, ESG and Sustainable Financial Strategy, about 1 year ago. So I enrolled the first batch of this program, and it was a very wonderful learning journey to tell the truth with all participants all around the world. So as well as the professor from that business school. So that's why I enrolled this new course, Sustainability Reporting and ES Data Management, immediately once I got this news. I hope I can have a more interesting learning journey weeks ahead. And also, I would like to meet some of you once we start this program. That's all. Thank you. Okay.
Thank you, James. That's really helpful. So I'll hand over to Jeremy now just to set the scene and to share why ESG reporting is now a priority for finance and accounting professionals everywhere. So Jeremy, over to you.
Thanks, Alex, and thanks to all those who've said where they're from. I can just see flashing up. We've got people covering the whole world. I don't know if there's anybody from the West Coast to the US, but I can certainly see East Coast all the way to Australia. So thank you for those who've risen early and maybe up late as well. So to set the scene, why does this matter to many of you on this call, who I'm sure are accountants of one persuasion or another? Well, I think there's some quite profound changes going on. Part of that relates to regulation around reporting and stakeholder and shareholder expectations. But part of it, I think, and this is very much the domain of the management accountant, relates to, and I'm a management accountant like James, how do we perceive our role within a business? Now, I'll start with the former first. Management accountancy, in essence, has always been about decision making and supporting businesses with the right mix of information they need to make really informed decisions. It might be about a new product launch, siting a new factory, entering or exiting a market. And that's bread and butter for accountants. I think of however much experience you have, that's absolutely core to what the management accountancy discipline does. What I think has changed over the last few years has been a growing expectation that our role within businesses is also to support sustainable value creation, or value creation over time, or long-term value creation. I think they're all, in my view, variations on a theme. Now, I qualified as a SEMA accountant more than 20 years ago, and I think when I qualified, and James, it was probably around about the time you did, the expectation there was that value creation still focused very much on shareholder value creation. And I think that's changed, particularly in the last few years, that there's now a broader understanding of what we mean by value creation. Value creation for shareholders is one part of that, but value creation for stakeholders goes hand in hand with value creation for the owners of the business, or the investors into the business. And management accountants, I think, are very well placed to help an organization understand how to do that and what to focus on. So I think we're all pretty familiar now with the idea of multi-capitals, that there is more to life or more to business life than the accretion of financial capital, because that can only happen when other types of capital are being managed. So human capital, social capital, natural capital, etc., etc. So I think that's one change, is this idea that there are other types of capital, and that we're also thinking about value creation over the medium and the long term. But the other thing that's changed, and this has really gathered steam over the last, really since COP26 in Glasgow, which is when the International Sustainability Standards Board was first announced. And in what's really a relatively short period of time, we've seen the launch of 2 sustainability disclosure standards, financial sustainability disclosure standards from the ISSB. We've seen the European Sustainability Reporting Standards issued via EFRAG from the EU. Yes, of course, there's been some deceleration with the omnibus proposal that came out in February. But the broad tenor of what's happened is momentum towards mandated reporting of sustainability disclosures, with the global baseline coming from the ISSB with IFRS S1 and S2, and then regionally specific standards, ESRS. And we've seen, particularly in the context of the US, and I can see quite a few participants are from the US, we had the SEC rule on climate reporting. It was rescinded. Now the SEC is no longer going to defend the rule. But we have the California climate reporting laws and other proposals from states such as Illinois and New York, and I think New Jersey, to name three. And momentum is building around global adoption of these standards. I serve in the UK on a government committee that's advising the UK government on endorsement of S1 and S2. And we are expecting the UK government soon, very soon, to release the UK sustainability reporting standard. So, and this is a common pattern we've seen across more than 30 countries to date. And as these new rules become a requirement and regulators in jurisdictions mandate the application of these rules, I think it's inevitable that finance and accountancy professionals will end up responsible for the disclosure of that information, for the preparation of the information, the external disclosure of it, all of the controls around it. And where management accountants, I think, will get involved is how can this new mix of information be applied to decision-making internally. So that's a little bit of a tour, Alex, but I think it's quite important to set the scene in terms of these different dynamics which have evolved over the last few years and really gathered momentum in the last 2 or 3 years in particular. So back to you.
Thanks, Jeremy. That's a really helpful overview. I'd now like to bring in James, who to share his experience of the learner journey. So James, could you maybe start by telling us what drew you to the ESG and Sustainable Financial Strategy program originally? I'd be good to get your thoughts on that.
Okay, thanks, Alex. This is a very interesting question. You know, every new things will start with why. So for me, it's quite easy. First, at SEMA, as the leading professional accounting organization, it encouraged its members to set lifelong learning attitude and also provide all kinds of learning opportunity, including our SFS programs. So that's the first reason, because we are, you know, the member of SEMA keep lifelong learning. Second, as a finance staff working in various finance functions for so many years, it's more and more important to know the sustainability is the key to the company or organization's success. Maybe you can heard some of the Chinese companies lose in recent years due to all kinds of issues, broken up or something like that. So sustainable is key for the company. So especially under current challenging environment in China, in the world. So we need to know the impact, not only from finance point of view, but also for those non-financial impacts. And more important, at this stage, as Siemens has done, how the company can successfully transfer from the traditional business model to a circular economy. So that's are the key drivers for me to enroll these sustainable related programs. Last but not least, as Jeremy mentioned just now, as finance staff, we will also take an inside look to see the company's operation. But also, I think for me, we also need to take an outside look to the whole company's operation, especially from, for example, from investment point of view. So that's why I also enrolled CFA ESG program last year. So which will provide a totally different view from inside and outside. But I think that's the key, how to say, initiatives from my side to enroll our wonderful sustainable programs. So thanks. That's all. Yes.
No, thank you. And you've touched on it a little bit there, but I was building on your experience with the SFS program. What sort of further inspired you to continue your learning with the Sustainable Reporting Management program? What led you in that direction?
Okay, so I would like to say the new program is just in time. Why? Just about 1 year ago, we have an internal discussion within the organization or within our reporting function about ESG reporting topics. At that time, I thought that there will be more strict ESG related reporting requirements, not only for EU, but also for China, because you know Siemens is based in EU, but Siemens limit China within China operation. And of course, as of today, it's true that when in this year, for China listed companies, there are very clear requirements regarding their ESG related disclosure. And of course, from the Ministry of Finance, our in charge authorities point of view, ESG related disclosure guidance is also in progress. So that means urgency for us as in-house finance staff to be well prepared for this kind of, disclosure requirements, if any, for any organization or companies, no matter you operate in China or in EU. So there is a joke, last year when I attend external webinar regarding ESG topic, one of the China PwC ESG partner was invited to give an opening speech. So during the team speak, I told him that I was learning ESG. He laughed and said, "Oh, you finance staff is always those people who maintain the sense of crisis." So I think that's true. We are facing our more and more strict requirements. So that's the key drivers, I think. Thanks, Alex. Yeah.
Brilliant, thanks, James. And then just another one from me. Do you have any sort of further advice for people who are thinking about which program is right for them of the two that we've discussed?
Okay, so for my understanding, for those finance or people who will directly engaged in ESG related reporting and data management, SRE will be more suitable. But for our senior management like CFO, CEO, and other operational managers, I think FS will be more suitable because FS is more about the strategy and the purpose of the company towards sustainability. What we can say, as Jeremy said, the company's long-term goal in terms of sustainability. So it's more about how to support the company transformation to a circular economy within the whole organization. So, of course, I think this is I still remember in our first FS programs, one of our tasks is to discuss the sustainable strategy with the board member. So I think it's quite interesting and aggressive. So, of course, that's only my personal understanding of these two different programs. But to tell the truth, I would like to recommend both of the programs to you, just as I done. Yes, it will bring valuable inputs or outputs to you all. So that's all. Thanks.
No, thanks, Jeff. That's really good. So we're sort of going to hand over to you, the audience now. So there should be a poll coming up on the screen very shortly. There it is, just in time. Please do answer in terms of what your preference is, your reason for joining today, and we will use essentially the top choices to form the basis of our Q&A section. So we can see a number of you already kicking off there with exploring career development in ESG, but please do jump in. That's fairly close run there, but it looks like exploring career development in ESG has just about pipped it, closely followed by building an ESG strategy, which of course is a big part of the SFS program. You will have a bespoke plan to take back to your organization at the end of it. We'll also look in the chat as well to see what's come through there. But Jeremy, in terms of building an ESG strategy, and for those focused on building an ESG strategy, where would you recommend that they begin, especially if buy-in from leadership is a challenge?
Yeah, well, that's a really important question, Alex, of where do you start? And interesting to see that that seemed to be the sort of the lead response from the participants on the call. I think there's a number of considerations. I would personally tend to start with governance. My view is, and I've done a lot of work with clients over the years with this, that if you really want to have confidence that your ambitions around managing a sustainable business of long-term value creation will be realized, you have to really start with the governance arrangements. And for me, that begins with the board. In an ideal world, there would be a board level sustainability committee chaired by a member of the board. And there would be a head of sustainability as part of the executive management team reporting through to the board. And that way, sustainability is represented twice over. It's represented at the board level, and then it's represented with the senior management, the executive management team. So for me, that's a significant starting point. I think number two would be around really articulating what the purpose of the strategy is. Is it perhaps a sort of legacy strategy where it might be seen to be not very well integrated with the business? So think sort of corporate social responsibility of old, that type of approach. Or is it a sustainability strategy where the organization has really worked through what are the key material, what are the key sustainability considerations that could have an impact on our success as a business? And where do we have the most significant impact on society and the environment, whether good or ill? And what can we do to increase the good that we have on environment and society and reduce the ill that we might have? And so that comes down to a really thorough understanding of the material sustainability issues. So in the parlance of the ESRS, your material sustainability impacts, risks and opportunities, which one will often hear abbreviated to IROs. In the context of the ISSB, this is the material information relating to your sustainability risks and opportunities as viewed by the leadership of the organization. So I think governance and a really good understanding of how your sustainability strategy is integrated or could be better integrated into the business in support of long-term value creation and management of the most important risks and opportunities that the business faces in the context of social and environmental concerns. So perhaps if I take an obvious example of climate change and of carbon emissions, and this is, James, your outside in and inside out perspective. What impact is climate change mitigation, adaptation, the physical risks from climate change, the transition risks likely to have on the business in the view of those who are leading the business? And what is the organization doing to reduce the impact it has on climate change through lowering its carbon emissions, perhaps having a strategy to reach net zero within a realistic timeline? So it's that sort of thinking which is important, and essentially it's applying the same discipline and rigor to these issues that one would to any other business consideration. Now, in terms of how either of these courses can support an organization, as James has said, the first of these courses, which is the ESG and Sustainable Financial Strategy course, which we've now had 7 cohorts. We've had nearly 350 people who've been through it. It gets uniformly fantastic feedback. We're really, really proud of this. And as James has said, this first course is really aimed at a strategic level within an organization. So it's aimed at leaders, CFOs, financial controllers, chief accountants, finance directors, etc. Those who are in a position to allocate resources and steer their companies. That's the course we would recommend for them. So for anybody on this call who's thinking, well, we want to finesse our sustainability strategy, or as a finance leader, I want to understand the role that I can play, that first course is probably the best one to do. And Alex, as you've said, participants on the course develop a sustainability transformation plan. It's built up week by week. And when we were designing the course with Oxford, we all felt this was really important, so that when participants have finished the course, they've got something they can take back to their organisation the day after they finish it, that has been reviewed by the faculty on the course and has been really carefully thought through, that they can use as the bedrock for how they might embed a sustainability strategy into the business from the perspective of the finance team, or finesse an existing strategy, or integrate it better into the organisation. So we've taken a very practical approach with both of these courses, that the learnings, the insights that come from each of the courses can be applied throughout the course, and of course as soon as the course is finished as well.
Thank you, Jeremy. And James, just sort of building on that, could you perhaps expand a little bit, or give some examples as to how the ESG and Sustainable Finance ESG SFS program, how did it help build your internal alignment around your ESG aspects in your role, and maybe give a sense of what the practical outputs were that you took away?
Okay, thanks, Alex. So I think how to say from our first module or program, I think the key takeaway for me is, as Jeremy just mentioned, stakeholder management or mapping. As you all know, that Siemens is a technology company focused on industry, infrastructure, transportation, and healthcare. The company creates purpose with purpose by adding real value to our customer. So just about 3 years ago, the company set up a D-Green framework. So D means decarbonization, E means ethics, G means governance, as Jeremy just mentioned, a very important topic. R means resource efficiency, and the last 2E means equity and employability. So I think that's very how to say, very sustainable goal for the organization as well as for the employee. I would like to say, for our daily work, we at GBS, how we implement this kind of sustainable employability or technology within our organization. I think we have very latest examples about RPA. That means robotic process automation. As I introduced at the very beginning, our organization tried to use the latest technology to improve our working efficiency. So this RPA, till now, I would like to say, our GBS China has developed more than 200 of RPA programs, which automating over 18,000 hours of work annually, resulting in a huge time and resource saving for the organization. Furthermore, we also build up RPA ecosystems with all stakeholders to invest more than 2,000 hours in deep learning. So this purely or strongly enhance the collaboration and evaluation among all parties involved. So what's the result, or what's the impact of this kind of internal digitalization initiatives? It strongly enhanced we as employee digital competence. The company always encourage employees to continuously learn and apply the latest digital tool through community sharing, training, and other initiatives. So this kind of digital technology can really release our efforts on this huge repeated task with less error. You can say robotic will level error in case we are interrupted. So then as a result, we finance staff can release our time or more time spent on insights providing to the management, and as well as create value to our company. So additional remark, due to our, how to say, remarkable achievements in RPA, Siemens Limited China was also rewarded by CGMA Best Practice of RPA of year 2023, which at the same time creates more broad social impact for the organization. So I think, Alex, to answer your question, I think this is how to say the topic of employment. That means we as staff can continue to build up our digital competence to facing our uncertainty economic development as well as our long-term career development. I think this is how to say very, very close sample for me and for our organization at GBS. Thanks, Alex.
I think, James, if I might just pick up on, I think that's a really interesting example of what I was talking about earlier in terms of value creation across different types of capital. So it's a nice example of Siemens investing in human capital development amongst staff. And as you've said, the advantage of something like robotic process automation for routine tasks and transactional tasks that the finance and accounting team might be overseeing, as you said, is it frees up the time of the team actually for more value-adding discussions, engagement with management. And I think that accountancy as a profession has always been really good at adaptation like that. I began my career with Unilever in Port Sunlight, where the soap factories are, and they had fantastic photos from, it must have been maybe the 1920s, of rows and rows and rows of men and women who looked like they were sitting exams, but they had great big ledger books, and they were doing the books quite literally for Unilever. And when I compared that, it was the same place that the photo had been taken with all of my colleagues who were hunched over computers, doing effectively the same task, but much faster, more automated. You know, it was a really nice illustration of how the profession adapts and evolves over time. And I think it's a good example there of how sustainability covers many different aspects. And it's a good example of the social aspects of sustainability. And again, something that's covered in the first course. We don't only focus on the environmental sustainability. We also look at the social aspects and the governance aspects of the EDS and the G. And I think that your example of RPA at Siemens brings that nicely to life. And Alex, before I pass back to you as chair, I've been asked to mention that as a one-off special, I think it's for the remainder of May, there is a 20% discount on both programs using the code learning20. They are few and far between, these deep discounts. And so for anybody who wants to sign up, there are terms and conditions around this discount code. So I think they only apply for those who sign up to one or other of these courses by the end of May. But learning20, imprint it in your heads and apply it when you sign up.
All capitals and no spaces. Do refer to the website for further clarity on that. It's on our website. No, thank you both. Before I move on, and as Bex has just put it in the chat as well, just to be further help. In terms of, before we move on with the rest of the poll, I just thought we could maybe address some of the questions that have popped up in the chat. We've got two in there. First one from Missy, asking essentially questions around the regulatory environment. So Jeremy, do you want to jump in on that one, or James?
What's the question?
Oh, so it's in the Q&A. So it says, do you think that the regulatory environment around sustainability has the responsibility for ESG, especially what they are willing to commit and speak to, more focused in legal departments, particularly for older established organisations?
So the question is about the role of legal teams, is it, in responding to regulatory
within the regulatory environment
requirements? It's an interesting one. I mean, I think it probably primarily depends on how a company's set up. In my experience, I think, particularly in the UK where I'm based, I would expect the finance team to play the lead role in interpreting regulatory requirements around reporting. And that's where I think in particular the relationship that the finance and accounting team have with their audit committee, with the chair of the audit committee, and with the external auditor is really important. The external auditor relationship is a very helpful relationship. I would expect a CFO with any questions around changes to the regulatory environment in the first instance to be speaking with their chief auditor to understand what may be coming down the line. In my experience, that role tends to be reversed in US companies, and as Misty has said in the question, is more likely to be with the general counsel and with the legal team. But I think it's often quite specific to the culture, business culture within a jurisdiction. Both functions, I think, have an equally legitimate role to play. If one takes, for example, the ESRS reporting requirements, they are complicated, and for a multinational corporation that may have listings in different countries, perhaps it's got listings inside the EU, outside the EU, it's got subholding companies in the EU, outside the EU. It actually becomes quite a tricky question around what has to be reported and by which company and when. For example, we had a few lawyers on the Oxford Sustainable Business Programme that I attended in last October. And it was clear from the contributions they were making that they were as well informed as any auditor that I've met, or finance and accountancy professional. They just come at it from a slightly different perspective. So I think both are important. I mean, if I was a CFO and I wanted absolute certainty, as much as one can in these areas, around my reporting requirements, I think in the first instance, I would speak with my chief accountant internally. In the second instance, I would speak with my external auditor and my audit partner. And then I would probably cross-reference that with my legal head of legal as well. I think that way one's covering off, all possible bases, as well as one's own personal knowledge of what's going on, to understand what does one have to report over the next reporting cycles, and probably the thing I would want to understand most of all is how can I ensure that I'm meeting all of the reporting requirements that I may face as an organization as efficiently as possible. So, for example, it's where the interoperability table that's been published by the IWSB and EFRAG would be very helpful, because one doesn't want to double up with reporting. So I think I would also be looking for as many sort of aide-memoire support as possible that's already in the public domain, to ensure that I'm not over-reporting in the context of sustainability. So all, I think, grist to the mill for any experienced finance and accountancy professional with, who do they turn to for support?
Thanks, Jeremy. We'll do another question before we move on. So we've got another one in here. I'll just read it out quickly. I wonder if it is really the ESG strategy that is driving ESG reporting, or if in many cases it is not rather just another compliance issue for many companies. What recommendations can you provide to instill thorough strategic sustainability discussions in companies beyond compliance?
Do you want me to kickstart that one? And then, James, it'd be great to hear your view from Siemens.
Please.
There's always the danger that reporting becomes a compliance exercise, but I think it would be worrying if that was to become the case in the context of the ESRS and IFRS S1 and S2. Early indication, which came from a research report that PwC released last summer, was that early adopters of the ESRS, and these were the largest companies that knew they were in the first wave of adoption, they felt that they were developing a deeper understanding of their corporate strategy through compliance with the ESRS. And that, of course, was one of the original ambitions behind the ESRS, as well as the provision of information to shareholders and stakeholders. So that, I thought, was quite heartening to hear. And that is what I would hope actually companies would really benefit from new reporting requirements is a much deeper understanding of their business model, how the business model creates value, what their corporate strategy is, how sustainability related risks and opportunities might be shaping that corporate strategy, and how resilient they feel the business is to shocks that there may be within the system they operate within. So I would hope that companies will take heart from that and see this as an opportunity to really develop a deeper understanding of these significant business issues, rather than seeing the reporting as a compliance exercise. I mean, obviously there's a degree of that. That's part and parcel of what the assurance process would cover, is whether the organization has met the reporting requirements. But I would hope that through the annual process of reporting, it would catalyze some really profound conversations at the level of the board, at the level of the executive management team, around what they're doing to ensure that the business is best placed to create and sustain value over time, and how the risks and opportunities are being managed in a way that provides a degree of confidence that the organization really is set up to be able to manage, create value over time and manage those risks and opportunities effectively. So that would be my high level view. But James, it'd be really great to hear your view from within Siemens of how to avoid reporting as a compliance exercise, and particularly coming from a GBS background as well. It'd be interesting to hear your view.
To tell the truth, actually, as I just mentioned now, this purely depends on different governance area. For example, as I mentioned just now, for China, we are facing this kind of ESG reporting guidance implementation phase. Not so, my understanding, not so as strict as that's in Europe, in European. So that's why, for our organization, for Siemens Limited China, I guess we are in the phase, as the question just mentioned now, we are in the preparation stage for this kind of coming, strict requirements in China. So, but I would like to say additional remark. I mean, sustainability for the company, I mean, like Siemens, it should not be additional requirements, but it shall be an opportunity, as Jeremy said. I would like to say quite new examples. When we facing this kind of reporting requirements, the most challenging thing is to check our carbon footprint, especially for our scope 1, 2, 3, especially for our supply chain, our customers' carbon footprint. So our function as we have a cyber function, cyber security. They just developed the very new products, which is a blockchain-based technology, which can track our own carbon footprint as well as our customers' footprint. So this is how we, Siemens as a company, to utilize these chance or new business opportunity to provide a sustainable solution to our customer. So as Jeremy said just now, we need to open mindset to see this kind of requirements. It may bring new opportunity to the organization, not just cost-wise. We do need to spend money on the reporting, on the data collection, but it rarely brings new business opportunity. So that's my understanding of our Siemens, what they have done now and for the future. So
and James, that's really interesting. You mentioned blockchain in the context of your carbon reporting. So that's an area that in the new course that launches in June. So this is the Sustainability Reporting and ESG Data Management course. One of the modules covers exactly these questions around how can technology make life easier for an organization. In fact, we talk about in the course about blockchain in the context of Scope 3 carbon emissions reporting, Scope 3 or Scope 1 and 2, and how technology can help deal with what has previously been really quite a complex reporting process around carbon emissions. So interesting to hear how Siemens has already adopted that sort of technology within the context of some of the sustainability reporting that's done.
Okay, thanks, Jamie. Okay.
Thank you both. We'll come back to the Q&A shortly, but do keep the questions coming. Apologies if there's a little bit of background noise. They're trimming the vern here at eGrove, so apologies if you can hear any lawnmowers in the background. I thought I'd go back to the poll briefly and just address the second highest answered question around career development in ESG, which of course is a very popular answer. And just wondered, James, if you could give us a bit more of a steer as to how doing these programs has perhaps shaped your career direction or perhaps your credibility in the ESG space.
Okay, so it's quite how to say. I do have many results or learning results from this program. Actually, I would like to say three layers. The first is the personal related competence regarding ESG. I would like to say that just immediately I finished this program, I support IPA, another accounting firm from Australia. They accountant very interested in ESG topic. So we 4 members just organized an on-site ESG workshop to introduce the whole ESG background as well as FS. So I just gave how to say about 1 hour introduction of our FS programs and the content from finance aspect, and received very positive feedback from our IPA members. So it strongly gave me full confidence of this kind of ESG knowledge and know-how and credibility. So that's the first layer, personal reflection. Second, I also try to use this kind of, how to say, ESG related competence and network contribute to our company's success. One example is that, as you may know, in China, leading by Microsoft China, they set up a China ESG Alliance, which is purely like an NGO, which organized by different famous companies like Tencent and so on. They organize this platform to promote our sustainable goals from a responsible company view. Once I get this news, I noticed Siemens is not in this alliance. So I just advise our sustainability head, maybe we can join from Siemens China point of view as a member of this alliance to demonstrate our company's responsible feedback or action to the whole society. Finally, it's done. So I try to collect our company's sustainable form or organization into this social organization to demonstrate our social responsibility. I think that's the second from the company or from the organization's point of view. Third one, as I mentioned just now, for this Germany, for this latest how to say products, we as finance are trying to support our sales function to sell out this carbon based footprint new products to our external customers. So I think this is our full competence from ESG point of view to support company's success, no matter from new product or from social impact. So that's all my takeaway. I think it's quite useful. I would like to say yes. Thanks.
Thanks, James. Just swinging it back to the Q&A, the omnibus bill appears to be coming up quite a bit. So one of the questions is, my concern is with the omnibus bill in Europe, there will be a big dip in jobs looking for ESG roles or sustainability reporting roles. Is this true? The omnibus bill cuts close to 70% of the companies the regulations would apply to. Do you have any thoughts on that one?
Well, we don't know at this stage. So it's important to remind ourselves that these are a proposal. The stop the clock measure has already been implemented. That pushes back reporting for any companies other than the largest by 2 years. We don't yet know what the EU legislators will do in terms of reducing, as they see it, the burden of reporting. Interestingly, I think it was yesterday or the day before, a public letter has been submitted to the European Commission, signed by, I think it's 80 leading economists within the EU. And it's very, very interesting to read. It's really quite a damning indictment of the EU's proposal. The view they put forward, and it's clearly a very considered view, is that the reporting burden of the current ESRS is not the primary reason that the EU's economy is less competitive than the politicians would like it to be. There are much more profound reasons than what in the scheme of things is a relatively minor reporting requirement. I think they've calculated that the additional cost of the full ESRS is something like 0.0003% of a typical large European company's net profits. So that's well worth reading. What impact will that have in terms of the broader demand for these types of services? I suspect that the biggest impact will be through raising the threshold for the reporting requirements. That's reduced the number of companies in scope really quite dramatically, from something like 50,000 to around about 10,000. So kind of back where we were with the non-financial reporting directive. That in turn would clearly have an impact on less large companies and their previous need to have had professionals in place to support that reporting, and then the whole industry that supports that, advisory and audit. So I suspect we will see less demand there, but we really have to wait now and see what happens to the actual omnibus proposals in terms of whether they reduce the requirements around the reporting, and we simply don't know. There's as much, I think it'd be fair to say, there's as much lobbying going on to defend the status quo as there is to go with what's in the, well, we don't know what's in the proposal, but to go with the broad parameters of the proposal to reduce the overall reporting burden. But as I've said, I think it's helpful to see a considered view. Politicians have their own reason for supporting the omnibus. Businesses may have their own reasons for supporting it or not, as the case may be. But that's why I think that this open letter from the economists is so interesting, because it's a very considered view. And one knows from experience that these open letters, when they have that number of signatures, everybody who signed up to it has had to agree to every word that's there. I would take that as a pretty good analysis of what's actually going on.
Thank you, Jeremy. Just aware of time, so we've got probably enough for one more question before we start to wrap up. I've got a good one here from Sally, saying, as Kenya and many other African nations grapple with the high costs of adopting ESG and sustainability strategies, there's a pressing question. How can we drive meaningful adoption at smaller, more accessible levels while we wait for stronger policy support and financing frameworks? That's part one. I'm also curious about how we can increase knowledge and awareness across communities, SMEs, and local institutions about the opportunity Africa holds in contributing to global net zero solutions, not just as recipients of funding, but as active innovators and climate leaders. What practical steps can we now take to build capacity, localize ESG thinking, and unlock grassroots-driven climate action? Start where you'd like with that one, Jeremy.
Thanks. That's an easy one. Gosh, there's an awful lot there. I mean, perhaps if I just start with the latter question. There have been some really inspiring case studies, and the ones that come to mind are North Africa, and I think there's a reason for that, of North African companies who are using the abundant solar resources that North Africa, or all of Africa, is blessed with, to create economically viable sun, solar generation electricity, which is then where there's an excess of the energy being created, is being pumped to European countries, well, not pumped obviously, but through undersea cables, is then being sold to European countries. And I think that's a really interesting example of how Africa is contributing to how we solve the climate crisis in a way which is profitable for the organizations in this example in North Africa. I think it's Morocco or Tunisia, in a commercial exchange of energy for obviously for money. And I think that's a really interesting example of how Africa is working with Europe. Europe needs the energy. Africa can supply it. It's viable to do it. The cables can stretch far enough without too much loss of the energy en route under the Mediterranean seabed. So there are examples. Obviously, one wants to see more of these, and as the question was raised, not necessarily through development aid, although that may be helpful with kickstarting these sorts of initiatives. I'm looking at a map right now of assurance around the world. We published a recent report with IFAC on assurance patterns, and what's interesting there is looking at the countries that currently are pretty low on assurance, and Africa as a continent is quite marked, other than Southern Africa, for relatively low levels of assurance, which I would take as an indicator of a lower degree of perhaps sophistication with how sustainability is integrated into corporate strategy, which I think the first part of the question was alluding to. So I think part of that is about capacity building, and these sorts of programs that we have are one way that we are trying to contribute through our partnership with Oxford to building capacity. I've had fantastic conversations over the year with PAFA, the Pan-Africa Federation of Accountants, that represents the accounting institutes amongst a number of African countries. And I know that professionally there is huge ambition for finance and accountancy professionals to play a role in sustainable business within African companies. So the willingness is there, the ambition is there, and I think perhaps there's a question around capacity building and how to accelerate that. And these sorts of programs, which genuinely attract a very global audience amongst participants, are one way of achieving it. So anybody who's dialed in from Africa, please have a look at these programs in particular, because they may really help with the challenges that the question has raised.
Thank you, Jeremy. So just a few closing points then, as we're getting to time. We want to be respectful of everybody's time here. Just to say that, obviously, to reiterate, these are both courses that we've been discussing and alluding to today are online. So you'll be learning through the aim of the game is accessibility and flexibility. So these are self-paced weekly modules containing video, audio, quizzes, and case studies. There's a lot of tutor support and feedback throughout. There'll be success advisors for time management, and you'll be joining a global cohort, rubbing shoulders with people of all areas of ESG within your cohort, and indeed through the alumni community once you've finished. So the networking aspect of these courses, even though it's online, is still a very big part of the appeal. And we sometimes hear that people secure their next role or their next change of career through somebody that they met on the course. So flexibility as well as communication and networking are a big part of these courses. Really, that just leaves me to thank this wonderful panel here today. So Dr. Jeremy Osborne and James Zhang, thank you very much for your time. Pleasure to see you on here today. And just to reiterate, ESG SFS running on the 28th of May, so there's a little bit of time for that, but it's coming up soon. And our new sustainability reporting data management program is running on the 4th of June. So take note of the 20% code that we've referenced. We also offer a corporate discount for block booking, so please do get in touch if that's of interest. If it's not just individuals, but a group of you, we do cascade these programs through organizations, groups at a time. So do let me know. Again, my name is Alex. I support the online sales here. Please do write to the exec ed inbox with any further questions. I'd be happy to support you. So yeah, we look forward to seeing you in either May or June. Thank you again for your time.
Thanks, Alex.
Thank you.
Thanks, James.
Thank you both.
Thanks, Alex. Thanks.
Goodbye.
Bye-bye.